Hello and welcome to the APMG International Australasia Wednesday webinar. My name is Mark Croxford and I'm APMG's Business Development Manager for the Australasia region. We've got a good turnout for our informative webinar, Managing Benefits, Optimising Return on Investments. Our presenters today are Stephen Jenner and Philip Reid. Today's webinar looks at the APMG certification Managing Benefits. Benefits are the rationale for the investment of taxpayers and shareholders' funds, and benefits should be the driver behind all change initiatives from initiation through to and beyond implementation. Managing Benefits is also a consulting specialisation within the APMG International Accredited Consulting Organisation scheme, and a Managing Benefits registered consultant can help an organisation bring the methodology to life when benefits management is being applied. Now, before we get started, a few housekeeping notes. You will have the opportunity to ask questions throughout the webinar using the question window on your GoToWebinar control panel. However, we will hold off getting Steve and Phil to answer those questions until the end of the presentation. Then I will ask Steve and Phil the questions on your behalf. I've set aside about 15 minutes to answer those questions, and we'll do our best to get through as many of those questions as we can in the time available. Now, I think that was Steve Jenner that just yawned because it's 3 a.m. in the UK at the moment. So today's webinar will be recorded, so we've captured that yawn for forever. Today's webinar will be recorded, and in a few days' time, everyone who is registered for this webinar will receive an email containing a link to the webinar recording so that you can revisit any aspect of the webinar or indeed share the webinar with colleagues. Before I introduce Steve and Phil for today's webinar, I'd like to give you some background on APMG International. APMG International is a leading examination institute which accredits training and consulting organisations and manages certification schemes for professionals. And we have a deep commitment to make leading practice available to everyone. With a global headquarters in the United Kingdom, we have 12 international offices covering Europe, the Americas, Central Asia, Southeast Asia, China and Hong Kong, Africa, and Australasia. APMG International's extensive suite of professional development products amount to more than 80 world-class qualifications, and our publications, courseware and methodologies are translated in up to 23 languages. Through a network of over 350 accredited training and consulting organisations, more than 1,800 specialist trainers and expert consultants provide advice and counsel and deliver training and consulting services around the products, methods and tools that improve the capability of organisations and individuals who apply them. And each month, on average, more than 18,000 exams are taken for APMG International certifications. Ladies and gentlemen, today's webinar, Managing Benefits, Optimising Return on Investments, is presented by Stephen Jenner of Portfolio Solutions, and Portfolio Solutions by Stephen Jenner, I might add, and Philip Reid of Wired Consulting. Steve has an MBA and a Masters of Study from Cambridge University. He's a Fellow of the United Kingdom Chartered Institute of Management Accountants. He's the author and Chief Examiner for Managing Benefits, a Portfolio and Benefits Management Professional, Chief Examiner and co-author of Management of Portfolio, or MOP to many of you, an author of several publications in the portfolio and benefits management fields, and someone who has extensive experience in managing large and complex portfolios, programs and projects. In fact, he designed, implemented and operated the UK criminal justice system IT approach to portfolio benefits management, which is recognised internationally. Wired Consulting Australia is an APMG International Accredited Training and Consulting Organisation. Phil Reid is an APMG registered consultant. He was the first Managing Benefits registered consultant in the world and is also registered to consult in management of portfolio, managing successful programs, P3M3, APMG Maturity Index, PRINCE2 and project portfolio management. He is an approved trainer in each of the methods he is registered to consult in, and Phil is also approved to train change management and P3O. Ladies and gentlemen, without further ado, I present to you your first of two Managing Benefits Optimising Return on Investments webinar presenters, Steve and Jenna. Over to you, Steve.
Thanks, Mark. There we go. I should say Mark is in charge of the slides today. Good afternoon to you guys. It's a hot topic, benefits management, portfolio management, which is great news. Because I say Mark has already stolen my line. Benefits are the rationale for investment. You know, the reason we invest in projects and programs is to realise benefits. We don't invest to keep our project managers occupied or to keep our suppliers profitable. The reason we invest taxpayers' money or shareholders' money, and that's fundamental, it's not our money, we're investing someone else's money, is to realise benefits, whatever those benefits are, whether they are in the form of, at the most fundamental level, increasing revenue, reducing cost, because we have to maintain business as usual or to meet a legal or regulatory requirement, or to make some contribution towards a strategic objective. Remembering that the definition of a benefit is a measurable improvement. It's the key word, measurable improvement, which means kind of like you see some change in the numbers, which contributes towards an organisation's objective. So there's a kind of it needs to be measurable, and we need to be able to relate it back to our strategic or organisational objectives, and I'll come on to that in a little while. So great, thanks Mark. Next slide. Marvellous, marvellous. You had to be worried then. So benefits are the rationale, but unfortunately, so the track record isn't good, and those that have heard me speak will have heard my next line, which is always, it isn't very good, it actually stinks. I mean, wherever you look, the evidence is consistent and it's overwhelming. All types of project, business process re-engineering, business change. We've got a quote from John Cotter there, the change management guru par excellence in the US. Olympic events, Montreal, the impact there. They took the citizens of Montreal 33 years to pay off the debt. Space launches, IT. Tony Collins, editor of Computer Weekly, said not all IT programs fail, just most of them. Now and again, serendipity sees a government department or a company buy an IT system that does almost half as much as was intended. That's the scale of the shortfall. It's not, we're 5% down, we're 10% down. Quite often it's half. And so various various quotes there from the OGC and from Lavallo and Kahneman, and you see it crosses all different project types, all jurisdictions, US, Canada, South America. I've been talking to some banks recently, and it's it doesn't matter who I'm talking to, the message is received with the same response. No one ever says no, that it doesn't apply here. I get the most amazing sense of deja vu when I'm kind of looking at papers from different organisations. So the track record isn't good. Thanks, Mark. And there's a lot of guidance out there. A lot of guidance, not only from the OGC Best Management Practice with MSP in particular, but a whole load of guidance has been around for some time. Clearly, it doesn't seem to be working. It's necessary, but it's missing something. And in managing benefits, we've identified 4 particular obstacles that seem to that need to be addressed if we're going to make benefits management work. Firstly, our forecasts are quite often, if not always, highly inaccurate or unreliable. Why would that be? Well, the first photograph there, the top photograph, that's Daniel Kahneman, Nobel Prize winner. He says that we suffer from a whole series of cognitive biases, the most powerful, which is just we are simply overconfident. The World Bank did a study, they called it the EGAP principle, the assumption that everything goes according to plan. We realise that not all projects go to plan, but we think our project will, or our program will. Kahneman calls it the planning fallacy. It's not a case that we don't know projects come in late, overspend and underdeliver. We do know that, but we think our program will be different. The guy at the bottom there is Professor Bent Flupia from the University of Oxford. He is the chair of program management at Oxford University. He says actually there's something else going on here which he calls strategic misrepresentation, which he defines as the planned, systematic, deliberate misstatement of costs and benefits in order to get projects approved. So, Kahneman says we're delusional. We suffer from these cognitive biases. We're over optimistic. Flupia says it's deliberate. We do it deliberately. And I have to say, when I talk to consulting firms, quite often they say, "Well, Steve, look, we hear what you say, but our job is to write the business case to justify the project. If we don't do it, they'll give it to Capgemini or Ernst & Young or whoever." But the basic principle, therefore, is if we start off with an unreliable business case, we're building on unsound foundations, and any attempt then to track and measure benefits is starting from a false position, because no one wants to be involved in an activity where you're trying to prove something that just was overstated to start with. They're kind of the fundamental issues we need to deal with. But beyond that, what's termed activity rather than benefit-led change, particularly in the area of business change and IT and HR systems. We tend to engage in, we do stuff, and then we try to work out what the benefits of doing the stuff are, rather than starting with the benefits we want to achieve and working backwards. Ideally, what we should do is we start with the benefits we want to achieve, and then we design our projects and programs to realize those benefits. In fact, what happens is, I said, we start off with all these activities then go searching for benefits, but they're all claiming the same sort of benefits, and then that's when we run into problems. Thirdly, we have these, even when we do the stuff, we suffer from the knowing-doing gap. Pfeiffer and Sutton talk about the knowing-doing gap applies across all disciplines of management, that we know what to do, but we just don't do it. Quite often, we engage in activities that don't kind of follow the guidance that we've been taught to apply. And even when we do, we seem to engage in box ticking. So we kind of do, again, we write a bit, have you got a business case? Tick. Have you got an SRO? Tick. Have you got a business change manager? Tick. Have you got a benefits MAC? Tick. Have you got a benefits realization plan? Tick. Do you realize the benefits? We don't know. So people, focus on producing the bits of paper rather than trying to really understand what the benefits are and engaging with the user. Oh, we're zipping on. And lastly, and then this idea, and then a miracle happens. We just assume that we put a new IT system in, we plug it in, and then the benefits automatically happen. In reality, and it's not always the case, some benefits just happen, but there needs to be some management intervention. If you're freeing up staff resources, then those resources need to be reallocated if we're going to realise the benefits or get it anywhere near the full potential. So I say these obstacles need to be overcome if we're going to make benefits management work. Thanks, Mark. Beginning to wake up now. So what we're saying is, look, at the top of the top of the pyramid, clearly it's not a pyramid, and on the top of the benefits management model, we have the benefits management cycle, which most people who are kind of involved will be aware of. This idea of identify and quantify the benefits, value and appraise them to determine where we should invest, plan in the form of business cases and benefits realization plans and benefit profiles and all that kind of good stuff. Realize the benefits and review. But the point about this is that's not just a sequential process. Each of those activities, each of those practices should be occurring throughout the cycle. It doesn't look like a cycle, but it is a cycle. So, for example, review should be undertaken at the very beginning rather than just waiting till the end. One of the techniques we talk about in the guide is this idea of pre-mortems, bringing people together at the beginning to try to work out why the program or the project might fail. So that's the cycle, but we say it only works if we address these 7 principles that you can see underneath. And that is essentially what I'm going to talk about now. I'm just going to cover each of those principles briefly, and then hand over to Phil, and we'll find a bit more about the consulting scheme. But the kind of underpinning logic behind this is, rather than what we've seen too often in practice, is, as Flupia and Kahneman say, is that we are overly optimistic in the planning, and then when it comes to implementation, we get awfully pessimistic, and the SROs have moved on because they believe that delivery is the easy thing, and no one hangs around to do the dirty work. Instead of the optimism in the planning and pessimism in the delivery, we need to be realistic in the planning and enthusiastic in the delivery. I want the enthusiasm, I want the commitment, but it's got to be there in the delivery when we want to change the world. We want people getting out there, engaging with the users. We don't want them to be enthusiastic when they're writing the business case. Okay, so let's explore these 7 principles. Thanks, Mark. Marvellous. Number one, align benefits with strategy. Why is that important? Well, going back to that definition of a benefit is a measurable improvement and that contributes towards an organisation objective. So we've got to understand what our organisation objectives are. We've got to understand what drives them. So the whole idea of driver-based analysis. What you see in front of you is the service profit chain. It's an example from the States. It was described by Kaplan and Norton as a generic balanced scorecard. It is an attempt to understand the organisation's business model. All organisations have a business model. Too often they are implicit rather than explicit. We've got to understand the cause and effect chain that underpins this value model or the business model, and then we need to understand what drives each of those key elements. So you have each of the elements in the orange box, or yellowy orange boxes there, but then these drivers are listed underneath, and the idea is then that we know we can invest in these drivers on the left-hand side, and we should be able to track improvement through to the right-hand side. Say this is not an attempt to kind of to justify benefits that can't be justified. This is a model that is used in practice. The idea is to use it to forecast the benefits and then to measure, and using benefits management to validate the business model. So, for example, Sears use the model, and Sears use this particular model, and they use it mathematically. They know that if they can improve employee satisfaction on the left-hand side, they can track that through mathematically and see an impact in revenue growth and profitability. Taco Bell, for example, as well, they know from the data that the restaurants that have the highest employee retention have the highest profitability, and those with the lowest retention have the lowest profitability. So they know by investing on the left-hand side, we can track that through. But as I say, this is just an example. Many other examples, balanced scorecard would be one. We need to understand what drives the key elements in our business model. So we align benefits with strategy. Thanks, Mark. And therefore, this idea of being clear about the benefits you're buying. In other words, we're not buying kit, we're buying benefits. And therefore, we need to be clear about the benefits you're buying. And normally then people say they kind of reach for the benefits map and they kind of wave it around. And there are various flavours, as we demonstrate here, and this is one of the themes of managing benefits, that it's not based upon one methodology. The idea is that, I mean, clearly it builds on both MSP and MOP, but at the same time we say there are other techniques available, and you kind of pick and choose and use the appropriate method in the appropriate circumstance. So kind of reading the clock from top left, we have an example of the MSP approach. Top right is the results chain. All the Fujitsu guys are kind of very much in favour of the results chain, and they all have their advantages and disadvantages. There's a investment or benefits logic map on the bottom right hand side, and then the Cranfield benefits dependency network. So various approaches to kind of to understand the benefits, understand how change can be combined, how IT, enabling changes, business changes, is combined to realise benefits which contribute towards investment objectives and strategic drivers. Just to highlight one point, and that on the bottom right-hand side, you can just about see we distinguish there between end benefits and intermediate benefits. That's important because quite often people say, this is a benefit. There's a fundamental test, and that's the so what test. It's not in managing benefits, but it's kind of it's there implicitly. We'll have to make it explicit in the next version. Got to ask that so what test. People say, well, this will improve stock turns, will maximise stock turns. And you say, well, so what? And you say, well, that might reduce working capital. Now we're starting to get somewhere. So it's asking the so what test about benefits. So we start to move through to the end benefits. That's great, Mark. Thanks. So my screen just went blank. There we go. Not me, it was my screen. Principle number 2, start with the end in mind. Now, hopefully, I'm sure all of you guys listening, you'll have copies of the rather excellent Managing Benefits in front of you. If not, you must do soon. There is a separate guide, a senior manager's guide, which is much smaller, fits inside one's pocket. What I say in my talks is actually, if we did this, if we started with the end in mind, Stephen Covey talks about begin with the end in mind. If we did that, the big guide, the 100,000 word guide, managing benefits, would actually be the size of the little pocket guide. The reason the guide is the size it is because we don't do this. Because we start with the solution and then we try to work out what the benefits would be. I did a talk in Utrecht recently, and one of the guys said, at the end, can I ask a question, Mr. Jennings? Can you give us any advice about how do we persuade managers to agree to our benefits? And I said, well, therein lies the problem. If you start with the benefits you want to realise, and it's just an example, it's the Victorian Investment Management Standard, so it is merely an example of starting with end in mind. The principle applies whichever technique. In other words, you start with the problem you're trying to solve. What would the benefits be if we solved the problem or exploited the opportunity? And then we design the solution to realise those benefits. So it's a kind of, rather than starting with a solution and trying to work out what the benefits are, trying to then trying to find some sucker somewhere to kind of agree to them, it's usually too late. We start with the benefits that we want to and work backwards from there. It's kind of fundamental point. I say too often though, in the real world, unfortunately, we don't seem to do that. But I think that would be a major step forward for a lot of organisations if they applied that approach. Thanks, Mark. Marvellous. Number 3, utilise successful delivery methods. Now, I'll give you some examples here. These are merely examples. We're not trying to sell, or I'm trying to sell Prince or MSP or Agile or whatever. Whatever it is, whatever model you have, whatever methodology you have, clearly we're not going to get the benefits if we don't actually deliver the projects and programs. So I'm not saying delivery isn't important. I'm not saying Prince isn't important or MSP isn't important or Agile approaches aren't important. They clearly are. They're not enough on their own. We need also to manage the benefits throughout the life cycle, but clearly successful delivery methods are a fundamental part of benefits realisation. So that's all I need to say. Thanks, Mark.
Excellent, Phil. Steve, thank you very much for all of that.
I haven't finished, mate. I haven't finished, mate. You've got to next slide.
My apologies. My apologies.
You're trying to cut me off early.
No, far be it for me to do that.
You won't stop me now, mate. You won't stop me now. Integrate benefits with performance management. So what we're talking about now is rather than this idea of, oh my God, what measures are we going to use? We've got no measures. The point is we've got to align our benefits regime, the benefits measures, with the performance management regime of the organisation. So that means at the kind of the individual level, at the HR, from the HR perspective, we make sure that the benefits responsibilities are recorded in people's personal objectives, but also we align those benefits with the organisation's performance targets, whether those are targets in relation to cost savings or revenue generation or bringing more offenders to justice or improving educational outcomes or more improving customer satisfaction. Whatever those targets are. And one of the approaches there, Stephen Kaplan in the States says, people ask me how to track benefits. He says, I say, don't book them. In other words, you record them in people's targets and then automatically they happen. Well, unfortunately, they don't automatically happen. We need to double check that the benefits have actually been realised, because otherwise all you've done is created an unfunded pressure. There's an example there of a contract that's used in Bristol City Council. Just an example. This idea at the bottom, the Sufi paddle, trust in God, but Tevye camel. The point is, if you're going to get benefits signed off, you're going to validate them with recipients, you've got to do it prior to the investment. No one's going to agree to these benefits after deployment. So this is about a process of aligning benefits with the performance regime before we make the investment, or early on in the investment life cycle. Thanks, Mark. Number 5. We're getting there. Click that. Marvellous. Number 5. This is fundamental. I'd say one slide, but what we're talking about is you have to manage benefits at a portfolio perspective. Mark's mentioned I'm the co-author of MOP, Chief Examiner for that qualification as well. What I say is, look, if you want to do portfolio management well, it has to be benefits-led. But if you want to do benefits well, it has to be done from a portfolio perspective. Clearly, we're going to manage benefits from individual projects and programs, but we also need to get a clear view across the portfolio as a whole. Consistent approaches across the portfolio. Why is that important? Well, it kind of addresses all those issues of double counting. Inconsistent approaches is far more efficient and it's far more effective But fundamentally, it allows us to add it all up. It allows us to get a picture from the portfolio as a whole. We can show, we can understand what difference is the portfolio going to make to our organisation from our accumulated investment in change. And then we can ask the question, is that the best we can do? Because too often we don't ask that question. And yet, if I ask anyone, if I said to Mark, what are your objectives for the next year? Mark will tell us, and I'll then say, well, is that the best you can do, Mark? And everyone will say, oh no, all right, I'll go in, I can do a bit more. We can always do a bit more. And as an organisation, we should be asking that question, is this the best we can do? But you can only do that if you've got a clear view of what benefits will be realised. The reality is, most organisations can tell you how much money they're going to spend on the portfolio in the coming year. They can't actually tell you what difference it will make. And again, just to cut to the chase, rather than what's the benefit and so on, what difference does it make? We need to understand that, I say, at the portfolio level. Thanks, Mark. The penultimate one. And having said that, we're not kind of selling MSP or MOP or whatever, well, the governance model, we say apply effective governance. And what kind of underpins the guide is very much anyone who's done MSP or MOP will kind of recognise the MSP, MOP governance models, and that's contained within the guide. But kind of underpinning it is this idea that, look, it's not just about reporting frameworks, it's about the kind of behaviours that underpin those frameworks. John Thorpe talks about activist accountability. In other words, this is not about holding people accountable. It's not about the buck stops here. It's about the buck starts here. It's about people taking responsibility for themselves. If you hold yourself to account, then no one can really hold you to account, because you're kind of coming a lot more proactive. So it's the effective governance is proactive governance. And lastly, Mark, number 7. And 7 talks about developing a value culture. And you may think, well, why have you put a picture up of a portfolio map, a risk and return, or attractive as achievability map? Well, what I say to people is, look, what happens to costs on projects over time? And every time I ask that question, people say to me, costs go up over time. And what happens to benefits over time? And they say they go down. And I say, well, why? Why do we allow that to happen? It happens for 2 reasons. It happens because, number 1, we allow it to happen, and it happens because our forecasts are inaccurate to start with. But if we start off with more accurate forecasts, why over time shouldn't we expect our projects and programs to become more attractive and more achievable as our project and program managers, who we love and we've invested in, as they find ways of exploiting capability, as they find ways of managing risk, we should expect to see our projects and programs moving towards the upper right quadrant. And hence, this is an active process. It's not about kind of passive reporting and tracking against some arbitrary forecast. It's about expecting improvement. We should expect improvement. So I say it's an active process. And I think if we can slip to the last slide, Mark, or the last slide for me. Oh, no, sorry, not the last one. I say, with a rich picture on benefits realisation, trying to look at things from more than one perspective, measures, indicators, leading and lagging, what's called evidence events, trying to date with destiny, surveys, stories and case. There's a whole load of stuff in the guide about narrative leadership and the power of stories. So it's kind of picture on benefits realisation. Thanks, Mark. I'm cramming in a kind of a week's course here in 25 or 30 minutes. Fundamentally, this is about emergent benefits as well, unplanned. Things change. This is not about, I say, not about tracking back against an arbitrary overstated forecast. Clearly, we need to kind of understand, does performance match the promise? But at the same time, quite often there are emergent or unplanned benefits. Andrew and Sirkin talk about scout and beacon approach. So you basically, the job of the benefits manager isn't to sit there producing reports that track against the target, is to get out there, engage with the user, engage with the customer, fulfilling this scout role, what's happening in practice, but also lighting the beacon, telling people, telling users, we want to know. We're hungry for information. If you've got a problem, tell us. If it's working, tell us. If you identify unplanned benefits, tell us, so we can disseminate, we can exploit, we can leverage the impact. So it's about this being hungry for learning. Thanks, Mark. So you had more slides than I thought. And lastly, it's about post-implementation review, but with a focus on continuous improvement. Post-implementation reviews are fundamental, but only if we use them for learning. So yes, we need to look back, we need to do the summative stuff. Did performance match the promise? But more importantly, formative. What can we learn? What can we learn relate to our projects and programs, forecasting, the idea of building a reference class for our forecasting, improving our processes, and as I said at the beginning, validating that driver-based business model, providing an evidence base. So being hungry for learning. Thanks, Mark. There we go. And my job here is done. That's it. There's the main guide and the senior manager's guide, both published. The foundation and practitioner exams are absolutely now available, done. Gosh, I can't remember. I think we launched the final launch of the exams. The practitioner exams was in February this year. I was in Chicago. We did the first train the trainer event in the US. And there's a whole load of articles on the APMG International website. They're free download. And there's a group, we've got a LinkedIn group. Please join that group. We've got over 1,000 members of that group already. So we're getting a really good debate going. And you know, got any questions? Just post them up there afterwards. And my job here is done. Over to you, Phil.
Thanks, Steve. You've got to love that energy. It's 3 o'clock in the morning, is it for you, Steve? 3:30.
It's now 3:34, mate. 3:34.
So I had the privilege of Steve teaching me benefits, and I think he managed a whole course in half a day. It was pretty full-on stuff. But thanks again for that. Look, it's interesting. Benefits for me isn't, and for a lot of people, isn't something that's new. It's something that has been around for quite a long time. I remember being in solution sales, and we were always taught, don't sell the solution, sell the benefits. But it's often a very difficult thing to think about. The solution is often very easy. The benefits are often a bit more difficult. And you know, if you start thinking about when you come up with a solution or some sort of outcome you're trying to achieve, just put an extra column in your spreadsheet or a table and say, what does that mean? What is the benefit of doing that? The other thing I think, it's interesting, Steve's book is very, very timely, I believe, because I see that there's a lot of maturity in the delivery of project management. So people know how to deliver projects. However, so they're delivering projects well. However, are they delivering the right projects? And I know, as Steve talked about, MOP goes into a lot of detail about making sure you're actually delivering the right projects. How is your portfolio looking? And clearly benefits is one of the main measures, and the alignment with strategy that benefits, you know, the benefits are going to achieve with against the strategy are very clear indicators of the alignment of your individual initiatives to be in the portfolio or not. In doing P3M3 assessments, my overall view is that most companies try and do too much. Which means that at the end of the day, they often don't achieve as much as they intend to. And if you look at benefits as one, but really a strong measure of, should we be doing this? Can we be realistic about the benefits they'll achieve? You'll start to reduce your portfolio down into a core set of aligned initiatives that will help you actually deliver more successfully overall for the company. So look, I've put a model up here. If people are wondering what the bit in the middle is, it's actually an onion, and I do feel that benefits is about peeling back the onion. You start off with the capability or the solution to a problem, but you have to keep on going. You have to actually peel that onion a bit further down until you get to the kernel. What is the actual benefit that this will derive? And there's some examples here, you know, the internal, you know, how do you, often people say, well, how do you start on the benefits journey? And it is a journey for a lot of organizations. A lot of organizations have notionally put benefits, numerical benefits in a business case. That has justified the initiative, and then it's forgotten about. And you have to look at it as a journey all the way through the life cycle of projects and programs. You know, and you can see the guidance in MSP has come a long way, and Prince 2 for that matter, to actually help people think about the endpoint not being capability development, but the benefits realization. So some of the things I would point to if you're looking at a portfolio view is actually saying, okay, what is the alignment? And again, it can be difficult sometimes in a department, in a project department. You might be just a little bit removed from strategy, but you have to then dig into the organization and say, really, if you're part of a public organization, there'll be some strategy that's on public view, and most government bodies actually have some sort of plan that they've actually made official. So have a look in there and say, what are the metrics that the organization itself is trying to measure itself, and are they actually true benefits, or are they just metrics, and are they outcome-based, or are they activity-based? So is it a case of handling 1,000 more calls, or is it the increase in customer satisfaction? And customer satisfaction is one of those that there's been a lot of models that say you increase customer satisfaction, you'll increase profitability, and a lot of good. There's a lot of good organizations out there will actually build that model for you and say your customer sat score is 7. If you get it to 7.4, this is what it means to your bottom line. So have a look for those. I've put some up there. Obviously, at the portfolio view, you're going to start to see some strategic objectives around employee satisfaction, cost, time. So what's the bottom line operational cost of the company? How much time, or how much time do people spend? One of those annoying metrics, I think, is you take the average revenue of the customer divided by the number of people in the organization as a factor of how productive an organization is. But the point being there is, if that is a metric that the organization is getting measured on, then you have to start thinking in those terms, and you have to start thinking of aligning your projects in those terms as well. So have a look at those. Next slide, Mark. And what sort of things will help? I think the biggest, other than that extra column, this so what column, as Steve described before. So what does that mean? And there's a great book. I think Steve showed me this, the Green Book in the UK, that basically helps you understand or rationalize the figures that people get in, so you actually can apply some metrics to the benefits that people are actually trying to realize. But so the benefits map, and if at some point you can show that map that shows problem statement, solution statement, but the benefits that they're both trying to achieve, and look at the portfolio view, build a map where you're showing the strategic objectives of the organization, the benefits that those will deliver, and then look for the alignment in your current project portfolio and say which ones are aligned to strategy and which ones aren't. Remember, one of the big signs of maturity of running projects and programs is the fact that the organization will actually stop a project or program, or will change it if it's not going to deliver the end results. Now, obviously, the end results are the achievement of some benefits in some form. So you're doing a great service to the organization if you actually start looking at this and make sure the alignment is there. Benefits discovery workshop. So this is a bit like running a risk workshop. It's a facilitated workshop. You're taking the problem. It may be at a portfolio level. It may be that the organization doesn't actually acknowledge benefits, or has never actually put their strategic objectives in terms of benefits. They might have them in KPIs, but they're not necessarily in actual tangible benefits. The so what, and this is again peeling back that onion. You want to actually have the senior managers around the table, saying so what? So what does that mean? What does it look like? How can we measure performance? How do we know when we're doing well and when we're not doing so well? Other things are to say, if you really, and you see this a lot in government organizations, asking, what is the true measure of the organization? What is it that's expected of the agency? And typically there'll be some sort of charter that says this is what the agency is here to do. So pick out the relevant details from that and actually use that and then start aligning to that, try and get measures for it. For example, I've shown a bit of work I was involved in the Navy engineering, and we had a series of workshops that said, what is success going to look like? How do we know that these projects and programs that we're actually initiating are going to achieve the end result? And the end result came down to three things. For the Navy, was seaworthiness, the ability of the ships to stay at sea, preparedness, the ability of the ships to actually go to sea, so how long can they actually be at sea for, and then the total cost of ownership. And quite often, the third one, for example, was one that wasn't actually being measured, but clearly total cost of ownership is something that should be measured, and if you can actually reduce that, there's a very strong measure. Other references, I'd say, your balanced scorecard. Most organizations have some form of balanced scorecard. So what are the measures on there? What are they actually configured in such a way that will help you build those portfolio level benefits that you can align the projects to? Once you've done that, that's obviously the first point. You then have to ensure that your project or program delivery framework is actually managing the benefits all the way through, and that means that you make sure your gate reviews have benefit reviews in them. You make sure that the initiative doesn't stop when a capability has been delivered. It actually stops when the benefits have been realized, or there are get well plans if the benefits don't actually realize the way that people think. So those are a couple of thoughts from me. Steve's got a great, well-organized and interactive LinkedIn site, and I would say absolutely get involved in that. I think it's fair to say that there's a lot more thought. Steve started the ball rolling on this. People are now thinking there's a lot more good thoughts that are coming through. And get involved. I'm seeing now organizations putting in a benefits realization manager. Now, I know in Steve's point, he says, I'm not about making new roles for people, but this is now saying that up front, that when we're assessing projects against existing portfolio, we're looking at three things. We're looking at financials, we're looking at the benefits they'll realize, and we're looking at the risk of delivery. So the benefits is really on the table, but the thing about it is just start. Don't be scared to get going. Once you get going, you'll realize actually there's a lot more there, and you can start building from that. Thanks, Mark.
Well, thank you, Phil, and also thank you to Steve. Ladies and gentlemen, it's now time to ask Steve and Phil some questions. I've already received a few questions. However, if any of you would like to ask either of these gentlemen a question, now is the time to type away in the question window of your webinar control panel. Just while we're waiting for additional questions, I'll take the opportunity to let you know about an upcoming APMG activity. On Friday the 15th of November this year, the APMG International Australasia Showcase will be held at the Melbourne Convention and Exhibition Centre. The APMG International Showcase Australasia is the most interactive portfolio, program and project management and service management event in the Australasia region, and provides the opportunity for you to identify, ask and learn how you can better develop yourself professionally and position yourself to become a future leader in your profession. The link on the screen will take you to the Showcase website where you can get more information and also register to attend. Okay, enough from me. We've had some questions flow through, so here we go. The first question, well actually it's a statement. The first question is some appreciation from Mel to Steve. Very worthwhile. Thanks for staying up late or getting up early. Well, knowing Steve, it's probably a bit of both.
Well, I went to bed, but I couldn't sleep, so there we go.
Yeah, a bit of both. Okay, and Laurie asks, Steve, this is probably a consulting question, so it might also be applicable to you, Phil, given your accent. Does the English cricket team have a benefits plan for the Ashes? But then after I think about that, maybe you wouldn't like to help them in the Ashes, Phil.
No comment.
Okay.
No comment.
You're absolutely right. I don't know a thing about cricket.
Yeah. Okay, let's get right into the questions. The first one is from Terry. Steve, can you provide any tips to help persuade operational managers to agree to the benefits forecast by my project?
There we go. That's what. Well, yeah. I mean, that's what I was saying. That was the question that came up in Utrecht, and I said therein lies the problem. This is, if you have a project and then you go looking for someone to sign off the benefits, no wonder you're going to have a problem, because you haven't kind of. You've got to. The point is, ideally you start with the business in the first place and you work back. You start with the business objectives you're trying to achieve. You design the project to achieve those business objectives. For example, if I need to save $100,000 out of my budget, and we design a project to achieve that, there's no problem in getting those benefits agreed, because the project's been designed to deliver them. The problem arises when we the IT guys or the HR guys or the strategy guys or whoever come up with these great ideas, and then they kind of go looking for someone to sign them up. So, nevertheless, of course, that's the real world. The tip, therefore, is to kind of state those benefits in terms that make sense. As Phil was saying, you have to relate them to the strategic objectives, to the balanced scorecard or whatever. You put them into business terms. I should just. I was scribbling down. I mean, just to pick on a couple of things. Phil quite rightly talked about organisations doing too much. A lot of research shows if you want to improve your delivery, just do fewer projects and programs. Most organisations just take on too much. This idea of selling solutions, I came up with an absolutely fantastic quote recently. It said, you've got to start the customer's experience and work backwards to the technology. And that was from Steve Jobs. And the quote goes on, it's an absolutely fantastic quote. And he talks about all the mistakes he made about starting with the technology and then kind of going looking for, so you start with what incredible benefits can I deliver to the customer. You start there, the kind of problem disappears.
Excellent, thanks.
I know, I've got to agree with this, Steve. I think I think that one of the biggest problems is actually people shuffling around the office trying to get the benefits, and it's one of those things, as I said, it is a journey. You have to get people involved, and there's very few organizations really that don't believe they should be doing things to achieve benefits. It just might not have been articulated. So your first job might be articulating what the benefits are that the organization should align to.
The next question comes from Laurie. It's to both of you. How do you see management of value being used in benefits management? Steve, if you want to open the batting.
Look, I think the trouble is people quite often, I remember I did a session, I do these training courses, and at the very beginning someone said, look, can you just tell us what's the difference? The point is, MOV, or management of value, has a specific meaning, and I think sometimes it's kind of we need to go back to that. At its heart, and I've spoken to Michael Dallas about this, and kind of Michael will agree. At its very heart, we're talking value analysis or value engineering. Value management is a discipline in its own right. It has its own professions and professional bodies and so on and so forth. But at its heart, it is about value analysis and value engineering, which means it's about the simplest level is about kind of reducing cost or making sure the cost is optimized for the level of benefit that you'll realize. So there's no conflict between that and benefits management. Benefits management is the application of the disciplines, learnings from change management, neuroscience, systems thinking, economics, behavioral finance, and so on, to the PPM world. It's kind of embedded in the PPM world. MOV brings a series of techniques that can add value, and I think quite often we kind of lose sight of that. Very useful techniques, particularly in the current environment. If you've got to reduce cost, if you've got to work about how do we get the most from available resources, then MOV has a number of techniques that can be used. So I see them as mutually supportive, and in fact in managing benefits, thanks Laurie for the question, in managing benefits we actually say that benefits management and value management are mutually supportive disciplines. Phil?
Yeah, I don't have much to add to that. I haven't studied MOV that strongly, but my understanding is it's quite it's its own discipline. There's a whole industry based around value management. And as Steve quite rightly said, it definitely aligns quite neatly with benefits. It's not a case that you have to do one or the other, but they definitely they can be used together to get the end result.
Next question comes from Simon. I think this is probably up your alley, Phil. Are there any suggestions about the best way to implement benefits for in-flight projects?
Oh, interesting one. And this is something that, you know, if you start if you can get the senior managers to realize that benefits are a great way of tracking project success, how do you actually bring those into line? Obviously, in most mature organizations, there's some form of there's some sort of business case that has actually stated benefits in it. What it probably doesn't have is any sort of schedule of when those benefits would be delivered. But what I would start to do is start introducing benefits discussions at this stage gate, so that when people are actually basically, you know, going to governance bodies and explaining where things are up to, or what they've actually completed in a stage, and what funding they need for the next bit. The question should just be asked quite openly: what benefits have been realized? Were they as they were originally intended? And if they weren't, what has changed? And has that learning been applied to the next stage? Now, that isn't sort of, you know, when you initially do it, it isn't meant to be a knockout question, but most people, you know, most people aren't aware of what they're not aware of. And if you can start to explain to people that the focus on benefits will increase, and it is expected that, you know, you're starting to learn from delivery of projects as to what is successful and what is actually achievable, I would take it in that way. Then in the future date, start putting it in your project delivery framework, or whatever your life cycle, if you call it a life cycle, and make sure that people are aware that when they're starting a project, that benefits are something that will be monitored all the way through. One of the nicest things to say to show senior managers is that 1 year or 2 year view that shows the initiatives that will be coming through and the benefits that they'll deliver, the little triangles that said this is the benefits that are expected at this point in time. Senior managers absolutely love it. Now, if you go off this afternoon and try and build that, I guarantee you'll come into some holes. But again, just if you start on it, you'll actually get a good picture of where the gaps are, and then you can fill in the gaps.
Steve,
anything to add?
No, that's kind of covered it.
Okay, the next question comes from Shane. Disbenefits. In your words, when would state a disbenefit to be profiled and mitigated versus a new operating cost put in the financials of the business case only? So
that's right. I entirely understand the question, but I mean the issue is quite often. I mean, look, a disbenefit is a whilst the benefit is a measurable improvement. I can't remember. It's too early in the morning for me. The disbenefit is the opposite of a measurable improvement. So it's a measurable decline, a reduction, and maybe it will be reduction that impacts upon the organisation's objective. It's not usually a cost, and people often confuse that. People often take the cost of business change and say that's a disbenefit. No, the cost of business change is the cost that you require to realise the benefits. The point about the fundamental point, of course, is that there are disbenefits. Often, if you ignore them, they can kind of fester. I mean, the example I quite often give is when I worked on the Tell Us Once program. What it meant was we were kind of revolutionising, transforming the citizen experience. But part of the implication of that was that we were increasing the workload for registrars. So you could say the registrars could perceive that as a disbenefit. Actually, as long as you engaged with them and spoke to them and told them what it was all about, they kind of bought into it because they were public servants. They wanted to see a better service. So it only became a disbenefit if you didn't talk to these people, if you didn't recognise that had an implication for them. But I mean, the point is actually fundamental. Absolutely, disbenefits need to be managed. On those benefit maps that I showed you, the bottom right-hand one in the slide deck actually had some items in red, and those are what we said was you put benefits in black and you put disbenefits in red. So we actually physically identify them on the benefits map. One other point about the benefits maps, by the way, whether it's a benefit or a disbenefit, that's great, but until you can answer what do the so what test, absolutely, but until you can answer the following question, all you've got is a pretty picture. And the question is, how much? So for every benefit you've identified, you've got to be able to answer that question, how much? Without that, I say really it's just a pretty picture.
Thanks, Steve. Phil, anything to add? Just have to get you to come off mute, Phil. Maybe not. Have we lost Phil? Phil, have another go.
Is that better?
That's better.
Hello?
Yep, I can hear you.
Hi, Phil.
Sorry about that. I must have dropped out.
Did you hear the question about disbenefits?
I didn't know. But,
okay, all right. Well, we'll move on. We've got time for 2 more questions, and then we'll have to wrap it up because we're approaching the hour time limit. The next question is to both of you. It's from Robin. How do you prevent double counting of benefits at a portfolio level? And I'll put that over to Phil.
Yeah, that's that is an interesting one, and I would say when you start on your journey, don't. Well, Steve might correct me here, but I would say get people to identify benefits first, and in your mind think about that there might be double counting, but it's a bit like wrapping them over the knuckles if they say here's a benefit and you go, well, actually that's been counted somewhere else. But there should be clear line of sight between the benefit that's delivered or the capability and the benefit that's delivered, and there should be you can build some trees that will show how those benefits flow through each of the initiatives. It is a bit of a science. What would you say, Steve? Is there anything you want to add on that?
Well, look, the first point is that you have to get that consistent categorization of benefits, a consistent way of articulating, classifying, and quantifying benefits, so that each project uses the same terminology, the same classifications. But then there's the point about validating the benefits. And the benefits have got to be agreed with someone. So, if I'm the business manager and I've got 2 projects claiming to deliver savings to me, if they have to come to me, if I will agree to those benefits, then there's no double counting. The issue is double counting occurs because we don't validate the benefits with the recipient. If you can validate the benefits of the recipient, you'd have to be insane to sign up to more benefits than can actually be realized. So I would say double counting a number of things. One is the classification. Secondly, it's about validating benefits. If it's a financial saving or revenue generation, then it should be seen in someone's budget. We need to see it booked in the budget. If it's a contribution towards a strategic target, then we should see it recorded in the strategic target. So that starts to overcome it. The other thing is to also the portfolio function, the portfolio management office, kind of challenging the benefit forecasts. And then when we get a business case, we shouldn't evaluate the business case for an initiative as a standalone. It's about looking at that initiative or that project or program in the context of the existing portfolio. What difference will it make? What's the incremental difference this project will make to the portfolio as a whole?
Thanks, Steve. The final question for the day comes from Edwina. I'm in a government department. How can I develop meaningful benefits measures? Phil?
Well, I've just been through this, and the department actually gone a long way. So they actually had measures, but they were actually activity-based measures. So do more of this, do less of that, and they weren't quantifying it. And if we just, having looked at those, if we then came back and said, okay, what is the key internal metric that we're trying to achieve here, or what's a key internal benefit, and what's a key external? So why is the government department actually here. And in this one, there was a look at the risk profile and how, the overall risk of what they did, and how could you reduce that risk. So I actually, it ended up, with 3 that they could align to. Now that one hasn't completely worked its way through, but at least they're now looking at next year's plan to talk about benefits rather than KPIs or pure sort of activity-based measures.
Now, Steve, before you answer the question, I know Edwina said she's in a government department, but in adding your bit to the answer, can you also talk about the applicability to non-government agencies or corporate enterprises, private enterprises?
Look, I mean, yeah, Mark, I mean, the point is that the same issues apply in public and private. Never has anyone said, that doesn't apply here, this does apply there. I'm currently talking to a major bank here in the UK. I did a session in the city for them last week, or beginning, it was last week. They've just invited me back to do another session. Now, you kind of go along and think, well, maybe it won't be relevant because a lot of the investment of banks projects now are very mandatory and regulatory. We've got a whole new regime that's come in, so they've got to do the stuff. But no, everything there was relevant. So whether it's public or private, or even not for the third sector, the same issues apply. Do you know what with defence? You thought, well, if there's one area where this stuff wouldn't apply, you might think it'd be defence. 25-year lifespans, or 30 years. What's the value of a bomb? God, no, in defence, the same issue. I'm doing a session for one of our for the RAF next week, a full-day training session on benefits management. So it applies across the piece. But in terms of how do we relate benefits back to the get meaningful benefit measures? Ultimately, it is about linking benefits back to the organisation's strategic objectives. So, if it's about, and there are only four reasons we invest. We invest to save money, in which case I want to see it in the budget. We invest to increase revenue, in which case I want to see it in the budget. Or we invest because we have to, because it's a legal or mandatory requirement. Well, in which case we need to make sure that it really is mandatory. There's the aspect that we invest to reduce risk, in which case, a lot of I did some work with a public sector organisation where they have strategic risk owners, and it's about going to those strategic risk owners and saying, what difference will this project and program make to the risk that you are managing? What's the level of exposure? So you can measure the improvement there. And it's not financial, but you can say our exposure was 18, but with this project it will reduce to 60. That's the improvement we're buying. That's the benefits we're buying. Or it's to make a strategic contribution. Now, if you don't have measures of your strategic success, then we've really got a problem. And benefits management can't solve problems that that exist outside the world of benefits management. But an organisation should have measures of strategic success. As Phil says, balanced scorecard. Many organisations have a balanced scorecard. That's a great place to start. So that's my start point in all of this.
Good on you, Steve. And thank you to both Steve and Phil for answering those questions. We're almost wrapped up here, ladies and gentlemen. But I'd like to thank you all for being a part of today's webinar, Managing Benefits, Optimising Return on Investment. If you'd like more information on managing benefits, there's a URL on your screen. Steve isn't on Twitter. He tells me he's a child of the 20th century. So am I, Steve. And life is busy enough as it is. That said, Phil and I are on Twitter. If you'd like to follow us or APMG International, you can see our Twitter handles on the screen. We're all on LinkedIn. If we're not already connected, reach out to us and connect. LinkedIn is a tremendous business development and networking resource. I use LinkedIn to share all sorts of information that I hope you will find of benefit. Now, don't forget, if you're not already a member of the Managing Benefits community of interest, then join the group. It's a great resource, and Steve is very active on the group. Website addresses for each of our respective organisations are there on your screen. If you'd like to email Steve, Phil, or indeed me, you now have our email addresses. Also, if you'd like to suggest future topics for a webinar, feel free to email me. And if you're not already subscribed to the APMG International blog, here's the link down in the bottom left-hand corner. It's full of interesting information that I'm sure you'll find of benefit. Once again, thank you all for being a part of today's webinar, and a reminder to those of you that registered for the webinar that in the coming days you'll receive an email containing a link to today's webinar recording. Well, on behalf of Steve and Phil, to one and all, thank you very much for joining us, and goodbye.